Good afternoon, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's morning comment. It's actually 11 a.m. here, YM, on my way back to Chicago. Uh, I am looking at these markets. After Friday's kind of shenanigans and the beans, we're lower on the day here, 11.07 and a half last, down 7 3/4. March corn down 2.5 cents. Decent new crop corn down a penny and a half. So whatever was going on Friday, it has no legs. I am looking at new crop soybeans hovering around $11. Why couldn't we get the $11 print after Friday's explosive pop up there in March beans? I don't know. If you look at the commitment to traders report, the funds are going to go into this report with kind of their typical position. They really haven't changed a whole lot. Now, this is as of last Tuesday, right? They are short about 70,000 corn, about 80,000 wheat, long about 30,000 beans. Maybe they're long 40 now after Friday. They're short all the wheats across the board. They're slightly long bean oil, but they don't have many massive positions heading into this report. That's kind of like good news, bad news. They are long across the board in all the livestocks, along 114, 115,000 fat cattle, long 16, almost 17,000 feeders, and they are long a bunch of hogs, 130,000. Hogs are lower today. Cattle holding in surprisingly well, right? You couldn't get more negative headlines than what we had last week with the Argentinian beef and everything else. So the fact that cattle's hanging in there, still higher on the day, $2 range in fat cattle, $4 range in feeders so far. Lean hogs taking a little bit off the top, but lean hogs have been on a tremendous rally. Right, we had a $19 rally off the low. So any way you cut it, those are still worth prices worth protecting in the protein complex. In the grains, we've got another USDA report tomorrow. The last USDA report, the January one, caught everybody by surprise. If we learned anything from that report, I think it's the fact that you do not have to have a lot of money tied up in puts. You can do 3 cent corn puts, 7 or 8 cent bean puts, and have some protection on just in case the USDA throws a fastball at our heads again like they did last time. I'd rather be angry at the USDA with a hedge than angry at the USDA and let them rip into your bottom line. So the good thing is you do not have to spend a lot of money to get a decent hedge on here. And at the end of the day, right, if you're bet long, you want to have your hedge or your insurance, price insurance, you want it two things. You want it to be as cheap as possible and you want it to go worthless. Because if that happens, that means you're in good shape in the cash market. You cannot have it both ways where you make money in the cash market and make money on a put. There's just no two ways to do it. And I wish there was, because it would be a great trading program. But at the end of the day, you've got your biggest risk is your unpriced bushels. So the nice thing is you don't have to spend a lot. Now, whether or not you want to bite the bullet and pay for the protection, that's always your choice. But if you don't have it on before the move, it's not a hedge, it's a chase, right? And we saw that last time. We had a really nasty move in the January report. And then 4 days later, I wish I'd have known it was the lows. We turned around and recovered. If you look at spot beans on Friday's high, that was $1 off the low that we saw on the USDA report. So there's going to be a lot of movement, I think, in spot beans, not so much in new crop beans. But we just had $1 bounce in beans. Uh, don't be surprised if we chew through some of that one way or the other. Now, am I bullish or bearish? Of course, I'm always friendly. I'm always hopeful. We've had excellent exports, but the market doesn't care. It's kind of like a buy the rumor, sell the fact. We saw that today. We had confirmation of some good sales to China, and the market's lower. So that is the nature of the markets. They make it very, very difficult to sort of stay the way you need to be. The corn and wheat export expectations all exceeded last week's estimates. 2/3 of the bean cargoes were destined for China. At the end of the day, we just like everything else, we need more of that. And until then, I think we may be range bound. So watch and see what happens tomorrow on the USDA report. You don't have to have a lot of money tied up. And vice versa. If you're like, you know what, I need to make a cash sale. I can't wait for the USDA report tomorrow, but I'm worried that as soon as I sell the grain, it's going to rally 30 cents. Well, you do not have to spend a lot of money on some March calls, 11 days. You can get some good protection on there. So, good marketing is about two things: defending the price of your bushels before you sell it, and then also staying in the game after the sale. Who am I to say that 2026 isn't going to be a weather year? I don't know, but I'm not going to promise people. That's bananas. All right, this is Chris Robinson, Robinson Ag Marketing. If you need some help, give me a call, 312-638-8868. My letter went out this morning. I put key levels in there. Then later, I also sent out some specific hedges that you might want to look at. If you're looking for a hedge and you're not familiar with how they work, give me a call. I certainly have not reinvented the wheel. What I try and do is take the experience I've picked up here in the last 30 years, try and help my clients do a better job with their grain marketing. Thanks very much for listening. This is Chris Robinson, 312-638-8868, Robinson Ag Marketing. Have a great day. I'll be back at it tonight, later on tonight, if we have any really big updates. But I would say, get ready for the USDA to report tomorrow. Hopefully it's a nothing burger, but you don't want to be caught sideways in case they surprise us. All right. Thank you very much. Take care.